right, let's now move on to the brewery sector in Nigeria. It has been a mixed tale of brewers in Nigeria after the first quarter earnings were released. Adewale Okunrinboye, a research analyst at ARM, now joins me to review the brewery sector and what we can expect from brewers in Nigeria. Thank you so much, Adewale, for joining us. It's been really interesting, the changes that we're seeing, especially with consumer-focused companies. I think the pressure really is on. I was speaking to the CEO of Nigerian Breweries recently, and he also confirmed there is pressure on the consumer's wallet. So to what extent do you think this is being reflected in the numbers that we're seeing from the brewers?
Thank you for having me today. Well, I think looking at the two brewers that released so far, so Nigerian Breweries more felt that impact more than Guinness, and I think what happened essentially was that Guinness has moved on more towards their innovation brand. They've innovated to move directly where the current market, which is at the value brand segment. So, I mean, Origin has proved to be a very key addition to their brand. And so what you're seeing is their revenue numbers have moved up to double digits. Whereas for Nigerian Breweries, whilst everybody expected that post the consolidation with Consolidated, you were going to see stronger numbers, I think the numbers largely disappointed in Q1. And it was a very sharp. So part of it was internal issues with supply chain, but also the operating environment was also quite tough for them.
Right. So this focus on value brands, is that the future? I was speaking to the CEO, and he also made the point that he sees the market share of value brands really growing over the next few years.
I think that's likely what you're going to see, and that's why Guinness, so that's why both companies are also responded to. Guinness came out with Origin, and Nigerian Breweries also come out with Ace Roots, and which tastes roughly similar to Origin as well. And so I think that's where both companies have realized that's where the market is going to be for maybe say the next 2-3 years.
Right.
I mean, given where the economy is currently with regards to the weak fiscal position of the government and everything. So I think generally the sense is that if this is where the market is going to be for roughly say the next 1 or 2 years, they might as well have something to feed consumer demand over that period.
Right.
So for both companies, what we think is that in terms of margin, so clearly because it's a value brand, it's more cheaper, you're going to see that thinning out in terms of margins, and you've seen that weigh significantly for Nigerian Breweries. So it was a bit of soft slowdown in margins. For Guinness, you saw that earlier in the year, but what you've seen is that with their latest numbers, they also picked up a recovery in Guinness volumes, which was good for them. So in terms of margins, I think now what you more see is that Guinness is now where more of the actions there. Their numbers are much more stronger than Nigerian Breweries numbers.
Right, but if I'm holding both stock, right, what do I do with them? Many people have been talking about them being richly priced for a long time.
Yeah.
Is this the time to get out? Because they are feeling the pressure now with the pressure on the consumer's wallet.
So I think for both companies, you're likely going to see that the multiples are very expensive. I mean, as you already mentioned, 28 times, and a generally weak outlook. I think
really sounds ridiculous given the growth that we're seeing.
Given the numbers you're seeing. And so what I think is you may likely move to there may be other places where you could put your money in. Well, for both companies now, I think what we'd like to see for two of them is how they're able to keep a tight lid on. So most of them are having issues with trying to source more of their stocks locally. So just as a way, or as a means of keeping down on the cost side. Also in terms of their financing side, you've seen both companies have been highly levered, and so both companies face a lot of pressures on the interest expense line. And so I think that's why you saw Guinness sometime this quarter come out with a commercial paper, which is just an attempt to just try to bring down the interest expense they're facing on the short term debt. So
how much of a factor would you say International Breweries, of course owned by SAB Miller, is in the whole dynamics that we're seeing in the market today?
Well, looking at both sides, so what we see is for Guinness, NB tends to have a much more national or much more broader distribution focus. And Guinness is more tends towards in the south. International Breweries more in the southeast, which is where they are based. So I think it's more in terms of the geographical competition.
It's all the geographical play. So you're looking at it's not really an issue for either player.
Well, you generally see that as both companies, as International Breweries continues to push, so they're investing more in trying to spread out from there. And I think once revenues are weaker, you generally see companies try to move out of their home zone more or less into try to eat into other areas. And so I think for MB, you also for International Breweries, you're going to see that also continue. But in terms of their size, they're still very small in the overall market, still between Nigerian Breweries and Guinness.
Not a pretty picture if you're investing in either stock. I mean, like we mentioned, very rich valuation, so we'll continue to see what happens next and all these strategic changes towards the value brands, what that would mean for them. But thank you so much. Thank you for joining us today.